literally we're going to be in key resources. And the key resources section are things like health insurance. And what we do at SCORE, which Diane talks about all the time, is we really try to provide businesses with each of these compartmentalized pieces for helping your business grow and succeed. Let's first talk about plan types. Most people understand that there are marketplace plans that are out there. These are what are called the ACA or the Obamacare plans. This is what came into force under the Affordable Care Act. These particular plans are guaranteed issue plans. What that means is it doesn't matter if you have any kind of health issues, you can get these plans. So if you're looking for a plan just for yourself, the marketplace is a great place to go. If you have things like diabetes or heart attack or cancer or things of that nature, because you're going to be able to get onto these plans regardless of your health risk. I typically recommend that my clients go to healthsherpa.com. It's a little bit more robust site. It does link directly to healthcare.gov, but it's a nicer interface for you to kind of shop plans and look at the features and benefits of various plans and kind of compare them. The other piece with these types of plans is how your plan fee is determined, your monthly premium is determined, is by your income and by your zip code and by the number of dependents in your household. So because this is an ACA plan, you may be entitled to what's called a subsidy. And with Biden in office, those subsidy caps went up dramatically this past year. Now that we're into open enrollment, November 1st through December 15th, those subsidies are continuing to be at higher levels. So if you're a single person and you're making under $50,000 a year, you probably qualify for a subsidy. So you might want to check out those plans. And these are going to be comprehensive care. There are no exclusions within these plans. The only downside is that there are limited carriers and they're typically higher deductibles. What your deductible is the amount of money you have to pay before you have full benefits that are provided, and I'll talk a little bit more about that. And then your networks do vary within those marketplace plans. The second option that you have are private plans. Now, these are kind of the old school medically underwritten plans. Not a lot of people know these are still around. There are several companies that are still doing medically underwritten plans. They're not guaranteed issues. So if you are a person who's healthy, don't have a lot of health risks, and you don't have a health history for the last 7 to 10 years for some of them, they do a medical look back, you can substantially save money if you're on a private plan. Those expenses are dramatically lower in terms of premium, deductible, and copay options. So this is going to be a less expensive plan, sometimes very similar coverage to an ACA plan, but they are underwritten, so know that you're going to go through a medical underwriting process. It's typically just a paper application with some medical questions, but those plans might be great for someone who's looking to have, something that's a little bit more affordable and you're healthy. Other plans that are on the market are short-term plans. Now, I don't typically recommend these to people. It was typically what's called gap insurance. So when you're outside of an open enrollment period, which you are not right now, so I would not be getting onto a short-term plan, these plans provide you with some level of coverage so that you're not without insurance outside of open enrollment. There are a lot of carriers that offer these short-term plans. They have varying costs, varying deductibles, but the hard part about short-term plans is they are medically underwritten, but they do it on the back end and not the front end. So what that means is with the private plans I just mentioned, they medically underwrite you on the front end. So what will happen is when you get medically underwritten, if they approve you for the plan, they only have typically a 12-month window to look back and deny claims. With the short-term plans, they medically underwrite you when you submit a claim. So they can do a medical look back and deny more claims that way. So be really careful with these short-term plans. They're really only for, the event where you don't have insurance and we're not in open enrollment. So just use caution when you're looking at more of the short-term plans. There's also Medishare plans that are out here. This is not health insurance, folks. Just know that going into it. Not that these plans are not a great idea, but typically, Christian Health Ministries has a Medishare plan. It's a guaranteed enrollment. Anyone can get into it, but it's very limited in terms of the reimbursements, and it's like a reimbursement account. So it's not insurance. They do not have guaranteed amounts that they pay, but I have seen people who have gotten things covered. I have talked with people who haven't gotten things covered. So be very careful here with the Medishare plans, and do your research on them, because it is not health insurance. You do not have a contract. They don't have to pay for your medical expenses. It goes to a review committee for approval. So just be real careful with the Medishare plans. HSAs and HRAs. Now, these are two pieces that can really work very well for small businesses. And the reason that I bring up both of these, the health savings account and the health reimbursement account, are ways that an employer can offer some level of benefits without going to a true group health insurance plan where you're required to pay 50% of your employee's contribution. So this is something that allows you the flexibility to either, save money on both your employee, and you can do an HSA and save money for health related expenses, or an HRA, which is a health reimbursement account, which is where you reimburse your employee for health-related expenses. Again, these are not health insurance, but it does allow you to provide your employees with some level of benefit per se, okay? There are some tax advantages related to HSAs and HRAs, very similar to that of health insurance for the employer. So it is a great idea to do this, and it gives you a lot more flexibility there. And these are really good for people who are in good health. Specifically, the HSAs are really good for people that are in good health. Also really good for folks that are interested in more the functional medicine side, whether you like acupuncture, chiropractic, massage therapy, maybe you're going to a doctor that's using herbal medicine. Sometimes that stuff is not covered by health insurance. With an HSA, it oftentimes is covered. So it does allow some more flexibility to allow the enrolled participant to go outside of traditional medicine for reimbursement. Just a little bit of information regarding the HSA. There are some rules around the HSA and the HRA that I'm not going to get into, but there are some regulations. If you do a Google search on the HSA or HRA, you'll find tons of information on it. But just know that these are regulated, and they're not just, oh, I'm just going to sign up for this plan. It is regulated. So you have to know the rules around them. There are certain structures around them. So just know what you're getting into there. But you do have, the tax-free growth of these accounts. There's, tax-free distributions from the accounts for qualified medical expenses. So it really works out well with the HSA for folks that are looking to have, some level of benefit for your employees. Plan types are over. Insurance costs. Now, regardless of the type of plan that you have, you're going to have costs for your insurance, and people don't understand that you pay for insurance in 4 different ways. The first is for your monthly premiums. Obviously, you're paying a certain amount each month to have that contract with the insurance company. If you have a true insurance, health insurance plan, that you're going to pay premium for. You also have a deductible, which is a set dollar amount that you do have to meet before you're considered fully covered. With that deductible, some things are outside of that. For example, like your annual physical, you don't have to meet your deductible to have your annual physical taken care of. You may have like some walk-in visits or primary care doctor visits that you don't have to meet your deductible for those to be met. For anything major, you are going to have to meet that deductible. Most deductibles that I see are between $3,000 and $8,000, so it varies dramatically with plans, and you need to research that and understand that. With the Health Sherpa that I talked about, they really lay that out nicely, the premium, the deductible, the copay, etc. So it makes it really easy to understand those plans. The copay aspect is what you're going to pay when you go to the doctors. So whether you're going to your primary care doctor or whether you're going to a specialist, plans vary based on what you have to pay when you actually go and see the doctor. And then lastly is your max out of pocket. So once you've met your deductible, typically with the Health Sherpa or the healthcare.gov, the ACA plans that I talked about in the very beginning, the Obamacare plans, I know there's like 5 terms for one type of plan. It makes it so easy for everyone to understand health insurance. But Obamacare, ACA, Health Sherpa, healthcare.gov, all the same. Those plans, you typically have your deductible, which is between $3,000 and $8,000. And then you also have a max out of pocket. So what happens is once you meet your deductible, let's say your deductible is $3,000, you also then have usually either a 70-30 split with the insurance company up to a max amount that you will have to pay, which is usually if you're paying a $3,000 deductible, then your max out of pocket is probably going to be between $5,000 and $7,000. So you're paying for insurance in a lot of different ways here. And I know it's super confusing, but if you can just get those 4 pieces down, then you'll get a better handle on how you're paying for insurance and what your actual costs are for health insurance. What are your premiums based on? Now, your monthly amount that you're paying is going to be based on your age, obviously, your zip code, which people are like, wow, that's kind of crazy, but it does matter because if you're in a very rural area, you may be paying a little bit more for health insurance because there's not that many doctors, there's not a lot of competition there. So just understand that your zip code does play into a role in terms of what your premiums are. If you're going for a medically underwritten plan, then obviously your health is going to be a factor there. If you're not going for a medically underwritten plan, then it's going to be your income. So typically one or the other of those bottom 2 variables, but always your age and your zip code are going to be a factor for getting those premiums and looking at the cost for the insurance. Your deductibles, they just vary based on the carrier. And that's something that you can impact a little bit with premium. So if you want to pay less than your monthly premium, you can choose a higher deductible plan. These 2 things work in reverse of one another. So the higher your premium, the lower your deductible. And that's one thing that you can just take into consideration. If you're going to be at the doctor's a lot and you're going to be getting surgery, you might want to have that higher premium, lower deductible plan. If you're not going to be, and you don't suspect that that's going to be coming into play, then you may want to choose the lower premium, higher deductible plan. But that's something that you do have a little bit of flexibility and control over is the deductible piece and the premium piece. The copay varies by plan, and honestly, it's typically, you're usually looking at anywhere from $20 to $40. Nobody's typically paying, $100 for a copay, but that's something that you can look at again when you shop insurance plans. Just look and see, what is it that the copay is for that particular plan. And then your max out of pocket is going to vary based on the carrier, based on the premium, and simply just based on the plan. So that's something, sometimes the max out of pocket is the same as the deductible. There are some plans that are built like that. So just know that that's another factor that's going to come into play if you do end up in a position where you're hospitalized or having surgery or something along those lines. The doctor network. So, there's a lot of alphabet soup that we throw around in this industry, the HMO, the PPO, the EPO, and people are like, what the heck does all this mean? I'm just going to keep this super simple for you. I built out this little matrix so you kind of see how this plays out. But an HMO is going to be the most restrictive network of doctors. What that means is that with the HMO, which is a health maintenance organization, you have to go to your primary care doctor to get referrals to specialists. Within an HMO network, that network is typically much smaller. It does not usually have doctors outside of your state or region that are in network. And the only things that are covered in HMO outside of state or region are emergencies. So if you're traveling a lot, I do not recommend an HMO. I'll either recommend a PPO or an EPO because those types of plans are typically nationwide coverage. If you don't travel a lot, the HMO might work for you. HMO plans are typically a little bit less expensive because that network of doctors is a little bit more restrictive. With the PPO, that's going to be your least restrictive network. It's nationwide coverage. Most of those plans that have a PPO network, it's typically any doctor, any hospital nationwide. You do not need a referral. You can go to specialists as you will, which is really nice. In the event that you break your arm, you can go to an orthopedic immediately. You don't have to go to your primary care doctor and then to a specialist. So it makes it a little bit easier to get the care that you want or need. An EPO is kind of a mix. It's like in between the HMO and the PPO. Network is a little bit more expansive, not as expansive as the PPO. You still do not need the referral, which is really nice. But again, the EPO is not that PPO network. So if you are in the EPO, Edward Paul Operation Network, if you are in the EPO network, then again, if you're outside of that network, it's only going to cover you for emergencies, just like the HMO does. This does matter for you. I tell folks the PPO matters with respect to specialists too. And I use this as an example, in the event that you have something, an emergency situation come up where, maybe you have a rare kind of cancer, you want to be in a PPO network because you want to be able to go to the top specialist in the country for whatever it is that's going on with you. If you're a pretty healthy person, then, maybe the HMO is a good option for you. But I always like to let people know, when you're picking a network, it is important to make sure you're thinking about, in the future. And that's kind of why we buy insurance anyway. So health insurance for your business. Typically, there are two plan structures for business. And we can add in here too, in the common payer plan, the HSA, the HRA kind of come into the fold there. The straight group plans, which is what most businesses start to lean towards, and we're kind of like programmed to do this. Oh, I'm a small business, I should have group health insurance for my employees. It's not typically necessary to go for a true group plan. If you do, there are a lot of restrictions, a lot of regulations. If you want to go to a true group plan, there are some positives. One of the positives is that it's the same plan for everyone. No one is looked at in terms of their health, but the downside of that is you are creating your own risk pool. So the premiums for your group plan are going to be based on the oldest, most unhealthy person that's in your group. So just know that going into it. So I've had group plans where I've had, a 25-year-old who's paying $750 a month in premium because there's a lot of older people who are also sick people and have a lot of health claims. So that is dispersed amongst the pool. It is a guaranteed issue plan, so everyone can get onto the same plan. The employer does have to contribute 50% of the contribution to that plan for each employee, and you do have to have 75% participation rate, and this is all government regulated. With a common payer plan, you have a lot more flexibility. You do have to have things that are fair and equitable. So if you're giving, if you're paying $100 for one employee, you have to pay the same amount for another employee. You really have to have something that's fair or equitable. You can't give, one employee pay 100% of their coverage and then, pay 50% for another employee. Cannot do that. So you have to be fair and equitable. The plan options are varied, but each individual is looked at for medical underwriting, or if they need a guaranteed issue plan, they'll be looked at for that as well. With respect to common payer plans, if you're in a position where you're looking for some lower costs for your employees, a big piece here, one of the things that I've been really moving towards with employers is the health reimbursement arrangement. I just think it works out really well because it gives the employees the flexibility to choose the plan that they want, and then the employer reimburses each employee the same amount of money, and all you're doing is collecting receipts. They do have to be plans that are, approved under the umbrella of the IRS, but those are pieces, again, you have to do a little bit of research there. There's an agreement you've come up with, but those pieces of information, you can contact me. I can kind of walk you through that, or you can just do a Google search on it and find out more info. But that's basically kind of like your two options when you're looking at plans for your business. Obviously, if you have less than 10 employees, I'm probably going to be moving you to a common payer plan. If you have more than 50 employees, a group plan is going to be your best option. And that's because the rates are that risk pool is going to be spread out enough where you're going to be in a position where it's just going to be more cost effective for you and more cost effective for your employees. So there are some kind of rules of thumb there with respect to the plan structure. With respect to tax implications, I'm not an accountant, but speak to yours. Obviously, there are tax benefits here. Whether you're doing group plan or common payer plan, there are tax benefits for you. For the employer, obviously, when you're paying those premiums, you're going to be getting a tax benefit for that. For the employees, it's typically a pre-tax withdrawal from their check. So it's a lot of benefit to them because now they're being taxed on a lower amount of money when they're getting their W-2 at the end of the year. A lot of the employers that I talk with, they use this as a huge recruitment and retention tool for their business. And it is. A lot of folks are looking for, attracting new employees, higher level employees, retaining those employees. So providing health insurance obviously is one of those things that can kind of set you out above other competing employers that are looking at the same pool of employees. And I know right now getting any kind of labor force, skilled or otherwise, is challenging. So this is definitely something you might want to take a look at. And the options are so varied, and you want to find someone that's going to work with you individually, someone that's going to take a look at your situation. What are you trying to accomplish? Is your primary goal to recruit and retain employees? Is your primary goal, the tax implications? So work with someone and find out, all of your options. A lot of times when I talk to employers, they don't realize all their options because they called Blue Cross and Blue Shield, and Blue Cross and Blue Shield sold them a group plan because that's what they sell. You really do want to try to work with more of a broker who can kind of look at all of your options under all of these different umbrellas because they're going to be more focused on helping you. And that's it. Open for questions. I mean, how simple did I make that?
That's it. Is that what you're saying? That's it. All right. We do have a question from James. He says, I understood that you may pay percentage difference between employees as long as they're not equal in title or division. Did I assume wrong?
So one of the things, and I'm going to say this with a huge caveat, when we get new governmental administration, health insurance laws change, and they change not just at the top level, they also change statewide. So with respect to group plans, my last understanding was it has to be the same percentage for all employees. If you're an owner of a company, then that is different. But if you are, if you're giving someone a higher level of benefit, and talk with your CPA about this too, because this is really their bailiwick, not mine necessarily. That's something you really need to be careful about with respect to, that favoritism and giving higher levels of benefit to varying levels of employees.
We have another question from Joseph. A small employer with 6 employees, are there benefits to purchasing a plan through a business organization you belong to that consolidates numerous small businesses into one big group?
Yeah, and those types of plans, it's typically what they call like an association membership, and they do have health insurance benefits. Yes is the answer to the question. Just do your homework. Make sure that the insurance is not a Medishare. It's actual health insurance because now you're into that dynamic where I talked about the Medishare, where you're just sharing costs. You're not necessarily insured for a specific incident. The difference between the Medishare or association types of benefits versus actual health insurance is a guarantee to pay. So most folks, they want that guarantee to pay, and because they're always thinking about the worst case scenario. And that's something, if you're in a program like that, what I typically tell folks is, get yourself some real insurance in addition to that, with respect to like I know United Healthcare has Golden Rule, which is kind of like a catastrophic plan. It's an accident coverage. So in the event that you're in a car accident or anything major happens to you, you can get a specific dollar amount given to you and guaranteed based on, certain things. So just be real careful, read the fine print, make sure that there is that guarantee to pay, and just understand what you're buying. If you're comfortable with the Medishare and the pros and cons, by all means, if you want that, then buy that. But just know what you're buying. I think, a savvy consumer is a good consumer. And I have plenty of people that are on those types of plans. They're perfectly happy with them. And I have others that didn't even know that it wasn't insurance. So just know what you're buying.
We've got a question, actually 2 questions from Gigi. The first is, what is the minimum and maximum number of people required for a group or common payer plan?
2.
2.
Mm-hmm. Mm-hmm.
2 is the min, yep. And there is no max, probably.
2. Yeah.
All right. You're sticking to that.
When you get into certain health insurance companies, and they have the right to have a different number. I've had group plans that were 2 people. I've had common payer plans that were 2 people. They don't require more than that. It's not. Okay. It's not a big. Yeah.
Second question from Gigi. For group and payer plans, how often is the policy and premiums reviewed? Whenever the most expensive person, that one that you described, the oldest and the unhealthiest, whenever that expensive person leaves or joins, or at a certain preset time, like annually, do they look at it? Usually
annually. So yeah, they're not going to assess your premiums, on a regular basis and see, who's in the plan and who's not in the plan. It's usually done on an annual basis, and it's your anniversary date.
Great. All right. Well, I think that we have answered all of the outstanding questions, and
wonderful.
They were outstanding questions. I think everybody.
they were really good questions. Yeah, one of the challenges in my job is just trying to keep up with different updates that are coming through. When you move from a Republican administration to a Democratic administration and vice versa, changes just come, and they come rapidly, and you can't even imagine what this world was like when Obamacare came into the picture. There's changes like that on a regular basis that are coming across in this industry. So it is very dynamic, and it's just important to understand it's a position where you want to incorporate the CPA. If I have a business client, I know their CPA. I'm talking to their CPA because I want to make sure that whatever we're doing is going to be to their best benefit tax-wise. So that's something you really want to make sure of when you're talking with someone, is that they do have contact with your CPA.
We have one last question. The deductibles, they're paid monthly?
Deductibles are paid as you go. So the only thing that's paid monthly is your premium. Your deductible is met when you're actually going to the doctor. So if you don't go to the doctor at all over the course of the year, you're not paying any of that deductible. And let's say you go to the doctor, you broke your arm, and you needed x-rays, and you need an MRI, and then you needed surgery and physical therapy. Your deductible is going to be met as you're going through that process. And then let's say later in that year, you broke your leg. Well, now your deductible is met because you already did all this. And that's how it works. It's met through the doctor visits that you go to throughout the course of the year.
Great. So I want to remind everyone, you can see the slide. If you don't have a SCORE mentor, please consider applying for one. So easy. either score.org or minnesota.score.org if you're local. You will be getting a survey. Please fill that survey out. It really is helpful for us on two levels. One, we'd like to find out what you liked about this presentation, but you also have an opportunity there to suggest further presentations that you might be interested in. And we're always looking for good ideas from you. So please complete that survey when you get it. You will, of course, be getting the link to this video and the slides that Paula has been using, so you can review them and follow up on them. If you apply for a Score Mentor and you have an insurance question, there's a good possibility that Paula will be there to answer your questions individually, which is most helpful as they relate to you and your business. Anything you'd like to add, Paula?
No, thank you so much, Diane. You know, I always appreciate the opportunity to work with SCORE and help folks out. And I thank everyone for coming today. And if I can be of further assistance, just reach out.
Wonderful. Thank you very much. And thank you all for attending. We really appreciate you supporting our organization, and we want to support you. Thank you all.
Thank you, Diane. Okay.
Bye-bye.